Gold prices. Well, they remain heavily tilted to the downside. We're still being magnetized somewhat at this very, very key area of liquidity at 4,500, which is holding ground at this moment in time. When we look at the daily price action, we are grinding to the downside. It goes back to this range that we've been talking about for a while now, which we're still somewhat caught within. So if we tidy this up a moment, see we're capped to the upside at 4,600. So say 4,580 to be quite precise. So this is the consolidation that's happening right at the moment in time. This narrowing price action, the range is getting narrow, narrow, narrow. You see that it's extremely narrow, and we're effectively breaking out. We're heavy to the downside. We had this breakout yesterday and somewhat of a bit of a retest today. So long as the rejection is there, is seen today, then you'd expect this to be drawn into the next areas of liquidity, which would be coming down and challenging this area, these lows of March around 43, 50, 60. If that breaks down, then we're going to be drawn in towards sort of 4,100. So it looks very heavy to the downside at the moment, where we could be seeing something like this, albeit there's a bit of noise and keys areas of liquidity in the way ahead of being drawn into these loads here, right? So it's just sort of might get a little bit choppy, but looking for something potentially like this drawn into those next key areas. But it is very much weighted to the downside, given it hasn't been any change and it's still inflationary concerns, and markets are still ramping up their rate hike bets from the FOMC and the stronger dollar. So there's a lot of macro that's weighted against gold at this moment in time. Keep an eye on farm payrolls tomorrow.